700 mark.
Yeah, we had Matt Orton from Raymond James in the morning, and I think his view kind of echoes with everybody because he's saying beyond all this uncertainty of tariff, who's saying what to whom, and China has apparently retaliated, saying we're not happy with what you're doing with our tech sector, etc. Beyond all that, markets feel that every dip is a buying opportunity, and you keep marching higher. Maybe that's what we're seeing in India as well.
No, absolutely. The direction has been up. Just one thing, though, guys, if you look at the one noticeable thing which stands out is that IVs have shot up, which essentially means that, and these are, by the way, weekly straddles we're looking at, essentially over the next 1 week, I mean, the options market is telling you that there is a 500-point move coming on the Nifty. Up or down, we don't know. But that is the only kind of, in a way, if you want to call it signal, whatever, but that seems to be one of the few kind of sort of noticeable things. Otherwise, I mean, it's a market which is, I mean, how do you assess it? We're off the lows, we were down as well. But it is, otherwise there's no real big signal to take away, to read and build on what we're seeing right now in terms of indications for the next couple of days. But IVs have shot up, so keep that in mind. One of the lesser talked about things, I think, is this entire Russia-Ukraine. I mean, you know, the war's gone on there for 3 years. It's not really mattered for financial markets. When it started, it did in 2022 immediately. But then, you know, every week we get headlines, but it's not really market for financial markets. But over the weekend, if you see, there has been significant escalation from Ukraine with regards to hitting targets inside of Russia. This is new because, I mean, the West has essentially told Ukraine, has given the go-ahead that you can use our weapons and strike deep inside Russian territory. It's not happened in the last 3 years. So, you know, that's the other question. Are we entering a new phase of the Russia-Ukraine war? I think we're going to hear more about this over the next few days or so. Russia will retaliate, and I think that perhaps keeps uncertainty, at least near term, a little elevated as well. Otherwise, I mean, it's very, very stock specific, which is going to be the focus here over the next 60 minutes. Guys.
Okay, so let's straight away get to the last hour trades then. Mitesh Thakkar is now joining in with a few closing strategies. Mitesh, what have you made of the day so far? Subdued in the benchmark indices, but midcaps are holding up pretty well. The midcap index is up 0.5%.
Yeah. So I think, on the index, again, it's still a market which is contracting, but I think what is interesting is the bank Nifty. In the last movement, which started from 49,000, the bank Nifty kind of rallied straight to about levels of 55,750, 800, right there. I think let us move beyond that, and once that happens, the bank Nifty could propel the Nifty higher, and the bank Nifty could then head towards 56,400, 500. So very positive setup, but I'm just waiting for the confirmation to come on the 2-hourly charts. Once that happens, maybe, you know, we'll start going long on the Nifty as well. But for the time being, waiting for the bank Nifty to get past 55,800 and maybe close above it. On the stock side, I have AU Bank as a recommendation. That's a buy. Keep a stop below levels of 704. Look for a target of around 740 on the upside. And the other stock which I like is Britannia. That's also a stock in which is seeing good price setup. I had a big breakout. It's given a pullback in the last few hours, so the entry point is slightly refined. Keep a stop below 55.45 here and look for targets of around 57.20.
Right, got that. Mitesh, thanks very much. Yeah, indeed, Britannia and a couple of other FMCG names. They're having a good session this afternoon. And we will get to the fundamental cues that could be behind that in just a bit as well. Deepan Mehta, director at Elixir Equities, is with us. Deepan, good afternoon. Thanks so much for joining. And actually, let me get your sense on this. Obviously, we know that under ownership is one thing that's working in favor of the FMCG pack. But beyond that, I mean, do you see any reason to shift ownership? Would you be a buyer, say, in any of the frontline names, FMCG?
Yeah, Subhi, good afternoon, and thank you for having me on your show. No, I think we are negative on FMCG. And of course, there'll be cyclical upswings, and because they've underperformed and fresh money may come into those counters. But I think a lot of investors are stuck in FMCG stocks. They've been holding these stocks for 15, 20, 30 years or so. And last few years, these stocks have stagnated, returns have stagnated. And I think that any upswing in FMCG, the traditional FMCG stocks, is a good exit opportunity. I wouldn't want to buy any of these companies at all. There are a few niche FMCG companies like, say, Vadilal Industries is there, or Zydus Wellness is there, which is into segments which are not yet mature. There's, of course, Varun Beverages also, if you could call it an FMCG company. But apart from these 3 or 4 very unique businesses, by and large, the companies into the typical FMCG products like toothpaste, detergents, hair oils, I would say generally avoid them completely. Of course, but Gillette came with a good set of numbers, and one needs to just understand whether it is something has changed over there, or it is just a one-time kind of a good quarter.
Apollo Hospitals is holding up in the green. It's come off from the highs, but still up close to about 0.5%. Good set of numbers. EBITDA was a beat. They've planned some aggressive hotel addition for FY26. Your thoughts on the hospital space, not hospitality, and in that Apollo Hospitals in particular?
First, a disclosure, we are invested in Apollo Hospitals. It's been a multi-bagger stock for us, and company continues to perform exceptionally well. Mind you, in this particular quarter, despite hardly adding any new beds, the core the core hospital business has done very well. The online pharmaceutical distribution business still makes losses, and once that breaks even, that could add an alpha to the profits of the company. The only disappointment was that Apollo Health and Lifestyle Limited, which is into diagnostics and smaller clinics and smaller healthcare facilities. I thought the growth rates over there were pretty tepid. I think they're about low double digit or so. So maybe if that also was to improve, then it could get into a good, could be a good growth engine for the company. But yes, I think they are expanding their bed capacity by almost 30-40% over the next 24 months or so. So I know that sounds great, but looking at the track record of the company, whenever a new hospital goes on stream, typically, the operating profit margins do get compressed. So I expect soft performance for next maybe 6 months, 12 months or so. But the long-term prospects are great. But again, valuation is extremely expensive.
Apollo Hospitals, valuations becomes a cause of concern. We actually did, catch up with Ms. Sunita Reddy to discuss what was a very solid quarter for the company. On the fourth quarter numbers, they have met expectations on almost all parameters. She did share her the company's plans going forward, including all the capex they're doing, 3,000 crores of capex being put to work this year. Take a look.
We are targeting between 70 to 72%. Having said that, our metro occupancy is already at 71%. So we will push metro occupancy to 75% and system-wide move to 71%. With regard to ARPOB, clearly we showed a 7% increase in ARPOB, and that is the trend going forward. It is a mix of tariff increase as well as case mix. So with these, as the third element of it, of course, is payer mix. So we're quite sure that we can continue with the 7% increase in ARPOB. Net EBITDA for Apollo Healthco came in at 36 crores and a 9 crore profit. So that is a significant part that as we move towards 1,000 crore GMV per quarter, both the digital, it will definitely become far more profitable. Right now, as a company, Apollo Healthco is profitable. Margins are looking strong. They're currently at 1.5% margin.
That's Apollo Hospitals for you. The other big movers are in the auto space. So, for instance, Hero MotoCorp is your top loser on the way up. You've got M&M going strong. So, to compile all the auto sales numbers for the month of May, Sudarshan now joins in. Sudarshan.
So besides few companies, most of the auto companies have reported sales for the month of May, and those sales are looking largely in line or better than estimates. So we'll start first with M&M, which is amongst top Nifty gainers. And for M&M, both auto and tractor segment sales have been better than estimates. Total auto sales were up 17%. SUV sales have increased 21%. And because of the continued outperformance by SUV, M&M continues to outperform the peers. Even tractor segment sales were up 10%. For Maruti, sales were largely in line with estimates, and it's helped mainly because of sharp increase in exports. For Maruti, compact segment remains under pressure. Even domestic sales, it was just basically domestic sales have fallen 5%. Hyundai Motor sales were below estimates. It has reported decline in the sales of 11%, while exports for Hyundai have increased by 3%. For Tata Motors, except bus, all the other segments have seen a decline, and that's the reason sales were below estimates. Ashok Leyland, which is a pure C play, sales were much better than estimates. Total sales have risen 5%, led by M&HCV segment, which has seen an increase of 11%, and LCV sales were higher by 5% as well. Now coming to two-wheelers, two companies that have been outperforming for the last few months, and in the month of May also they have outperformed. Those are TVS Motor and Eicher Motors. For TVS Motors, all the segments have seen an increase of more than 14%. Total sales were up 17%. Two-wheeler sales have increased by 16%. EV sales have moved higher by 50%. But for EV sales, companies saying there might be a disruption of supply in rare earth magnet, and that may impact EV sales in near to medium term. For Eicher Motors, sales were much better than estimates. Up to 350cc segment, sales were higher by 26%, and above 350cc, sales were up 16%. Exports too, contribution of exports have been increasing continuously every month, and for the month of May, sales for exports have increased by 82%. Bajaj Auto sales were largely in line. Domestic sales were under pressure. It was almost flat, while exports have increased by 22%. Hero Moto, it has been underperforming peers. In the month of May also, sales were below expectations. Total sales have increased by 2%. Motorcycle sales was up 1%. Domestic sales were up 2%, while exports were flat. So apart from Hero MotoCorp and Tata Motors and also Hyundai, most of the auto companies have reported sales for the month of May, which were largely in line or much better than estimates.
Thank you very much for that. We spoke to Mahindra Automotive CEO, who said the company is more focused on increasing volume than market share. Listen in.
Mass market share for us is an outcome of the traction we see with our customers on our portfolio. So we don't necessarily put out a target for what our market shares need to be. We are focused on delivering on the volume projections that we put out there, and most importantly, on delivering to the customer expectations in terms of their bookings as well. So that's really what we are focused on. Now, of course, as we see what the industry projections are and the overall numbers, if we continue to keep this kind of pace and we do mid to high teens, I would think that there's a natural conclusion that there shall be some market share. But that's not necessarily something we're chasing on an ongoing basis.
All right, that was the word coming in from Mahindra Automotive. And staying with the auto space, our colleague Parikshit caught up with TVS Motors' Sudarshan Venu on the company's EV lineup and potential supply chain headwinds going forward as this rare magnets issue continues to be a big impediment for the EV sector.
We are committed to building all segments in EV that we believe make sense. And so we have the TVS iQube, which of course has done well. We have now started retail of the TVS X, which is sort of a flagship scooter, which shows the capabilities of what we can do in terms of technology and materials and really creating a fantastic riding experience. And you're resonating with the young customers in terms of connectivity, in terms of use of advanced materials, in terms of design. We're also launching another electric scooter this year. And we've done the One Make Electric Racing Championship and also the electric three-wheelers and electric bicycles as well. At the same time now, there is this whole supply chain challenge in terms of China banning the export of rare earth, high rare earth HRE magnets, which are actually very important for our motors and other parts of the EVs. So this EV supply chain disruption is certainly going to pose a short to medium term challenge. And I think as India plans its EV strategy and EV plan, the adoption will have to be phased in or phased up, along with developing an Atmanirbhar supply chain in India, where India, as the world's leading two-wheeler market, which has produced 3 of the top 5 companies by volume globally, has its own supply chain, its own R&D, its own capability, and EV is really built on that basis.
That's an interesting and important comment there. Now, while speaking at a press conference, Minister of Heavy Industries, Mr. H.D. Kumaraswamy, said he doesn't expect Tesla to manufacture in India. Listen in.
Tesla, we are not actually expected from them. They have only to start 2 showrooms. They are not interested in manufacturing in India.
Okay, so this is a statement that was made by Mr. Kumaraswamy today, and this goes back to, a story that our colleague Parikshit has done in the past about the way forward for, India's approach to EVs and allowing imports. And it, there are certain reports indicating that there could be some sort of a new policy for this in terms of how much manufacturing the companies, any foreign companies doing in India in lieu of the imports that are being allowed, the tariffs that will be levied. And in that context, I mean, to that question from the press about whether Tesla will make in India or not, that was a statement from the minister. Let's go back to Deepan. Deepan, autos, I mean, it's the same story, right? So if TVS is doing well, it's continuing to do well. If M&M is doing well, it continues to do well. But then we are not seeing flashes of brilliance, too many of them at least, elsewhere. Anything you'd recommend buying right now? Two-wheelers, four-wheelers?
You missed out Eicher Motors.
Eicher Motors, yes, I stand corrected. I was just coming to two-wheelers. Yeah, two-wheelers relatively better. Even Bajaj's sales are better.
Or TVS, I think the best-in-class numbers, again, it's a disclosure, we are invested in it, have been so for the last several years or so. Very good set of numbers, quarterly, monthly figures from Eicher Motors. 82% higher revenues, I think that's quite phenomenal and does open up new opportunities for Eicher Motors. Just rewind back 12, 24 months ago, there was so much of uncertainty around Eicher Motors stock because of emergence of competition. But now it is clear that the competition has come and Eicher Motors still has maintained or increased its market share. So that takes out one level of uncertainty around the stock. The category as a whole within the two-wheeler space is doing exceptionally well and growing in terms of its size within the two-wheeler industry. And mind you, with rural expected to pick up because of better monsoons, I'm pretty certain that Eicher Motors will have the best ever year in FY26, and we remain very positive on the stock. But look, our views are biased because of our long position in the stock.
M&M? Do you hold M&M?
Hold M&M as well. I think we seem to have got the auto pack right. So you hold M&M as well, and I think that also a phenomenal set of numbers. And mind you, when tractor does well, the company's performance improves significantly because that's a very high ROE business and that's got higher profit margins also. So I'm particularly pleased about the 10% increase in tractors. And again, I think it's a great play on monsoons. Tractor sales can improve even further from these levels if you have a good monsoon.
Absolutely, highest margin there as far as tractors go. Deepan, I was looking at Cosmo first. Actually, we've been looking at it go up for the last 15 days now. And 3 years, Deepan, really 3 years, sideways, nothing. And then 1 month it doubles. That is last month. It's just a absolutely crazy move here. Any thoughts?
Well, Prashant, this is what happens in mid-cap stocks. For 2-3 years, they don't go anywhere. And then suddenly, the performance improves, something changes, some structural changes take place, or there's a cyclical upswing, and you see the stock doing well. But that's also true for SRF, which also is into film manufacturing, one of India's largest plastic film manufacturing company, very high value-added product over there. And SRF numbers also have been pretty decent. Last, I think, 2-3 years, they were being pegged down because of the film business not doing well, as was the case with Cosmo, but that's also done very well. But really, within this space, the company to watch is this Garware Technical Films. And that's been a quiet performer. It's been a multi-bagger stock last 4-5 years or so, and is looking at exports also very seriously. And now with a lot more glass being used in architecture, their films are going to find even more application. And as the premiumization takes place within the auto industry, they have some great products for even covering the body of the car to prevent to kind of keep the paint from being rusted or to keep it, I would say, in its original condition. So that's a great stock. We missed it, but very good performance from there as well. And I would rate it amongst the best kind of a film company within India.
Garware Technical. Okay.
Isn't this the company which also makes nets, which are used for fishing sports?
This is the wrong company. I got the name wrong. This is Garware Polyester. Earlier it was called Garware Polyester. Now it is called, I think, Garware Films or something. I'm sorry, I got the name wrong. But that also is into sun control films and other kind of products which are related.
Garware High-Tech Films. That's
Garware High-Tech Films.
That's the name of the stock. Currently quoting at almost 4,000 $600. Got that, Dipan?
Yeah.
Interesting name coming in over there. Let's actually put the spotlight on Nykaa, going back to consumer names. Nykaa, well, it looked like the numbers are pretty okay, but the stock has been trading under pressure throughout the day. In fact, it's down almost 4.5%. Let's go across to Mangalam to understand what the issues could be, if any. Mangalam?
Well, as far as the reported numbers are concerned, there wasn't much issue if you look at just, the company on a basis of 24% revenue growth, 40% EBITDA growth, margins expanding 100 basis points, and the net profit on a favorable base growing by over 110%. But if you look at the internals, the growth has been driven entirely by the beauty and wellness business. So if you look at their beauty business, out there the revenue has grown over 20%. You have the EBITDA growing over 30% as well, and there has been a margin expansion. However, what the street does not like is that it is only concentrated on the growth is concentrated by the beauty business. I was looking through a couple of brokerage notes as well. They said that the fashion business has been struggling for a bit. This time around as well, the revenues grew by just 10%, and out there was no visibility on that turning into profits anytime soon as well. Remember when Nykaa had earlier listed, the story was that the beauty business will continue to grow at a steady state with margins expanding out there, whereas fashion will be the growth driver. Here, fashion is not the growth driver. Beauty itself is doing both growth as well as the margin expansion business. So maybe the street would have liked the fashion business to do a tad better, because that is a larger total addressable market for Nykaa more than beauty itself. But having said that, these numbers are nothing really to complain about, especially from the beauty end at a time when competition is intensifying from Tira, etc. But I think the street is taking note of what's taking place in the fashion business, and as a result of which the stock is selling off a little bit.
Okay, all right. So maybe it's the fashion business not firing up as much as the beauty business. Maybe that could be one issue with the market. Got that, Mangalam? Thanks for that. Still down 4% on Nykaa. Dipan, let me toss this to you. Any interest? Fashion, beauty, or both?
No. Nykaa has been a disappointment, and I don't even know what the road to solid profitability is. I think if you strip off the other income, net, I'm pretty certain the company is maybe making a loss also. So look, I'm out of Nykaa. I had invested in the company through its IPO, but some of the business and the kind of dynamics don't make sense, especially at these valuations. So it's an avoid for me. And this new age companies, one has got to be a bit careful what businesses you get into, especially, if it's like a business like Nykaa. Look what happened in Ola Electric also, so where it's physical goods that you have to manage, although it's a platform, it doesn't really, deliver great returns over a long period of time.
What about Swiggy and Eternal? Over the weekend, we got those pictures of Zepto's Dharavi warehouse, the dark store, where there was a gross violation of all the hygiene rules. And now it appears that the state, Food and Drug Administration is planning to inspect the facilities of all quick commerce companies. So do you think this is going to have an impact on the listed share price?
Look, I don't know whether it is a one-off situation or, these companies have been cutting corners. One can't really say. But we remain positive on that particular space, and Eternal in particular as a disclosure. But our holding period has got extended, and investors should expect that these companies will take longer to go into solid profitability. But end of the day, unlike Nykaa and Ola and some of the other new age businesses, it's a platform business. And so they have great operating leverages. And eventually, at some point of time, even the quick commerce business will start to contribute positively and solidly, as has been the case with the food delivery business. And I completely agree with the management strategy of investing even further heavily, like kind of doubling down on quick commerce to take on the competition so that their market shares are maintained. So very positive on the space, but you need to be invested for a long period of time. 3 years, 5 years, 10 years, who knows, before you can get some solid outperformance in this particular segment.
Rima, I don't know if have you ever looked inside a dark store? I have a dark store near where I stay. It's not very exactly close by. And out of just curiosity, this is some time back, I don't know about now, but I did. And it's open, the people are going in and out. So it's basically just time, right? and what the Maharashtra FDA found, and I'm not naming which drugstore this was, the company it was, but the point is it's absolute frenzy. By the time you order on your app, right, the order gets there, somebody has to find the shelf where it is on, pick it up, come to the counter, right on, pack it if you ask for packaging or whatever, and then you got to rush out, and this is happening, thousands. So I don't know how much of what they found is. I think there's some specifics in terms of what they have found, etc. But I think it's just the nature of the business. It's chaos. It's just has to be chaos, right? Because we've got to get from there to wherever we are in.
But I think in this case, something that was not taken well at all by the authorities was things like fungus and all of that. Just a lack of hygiene. Chaos and items not stacked up properly on shelves, not marked.
Yeah, because there's no time. I mean, you got to, you just...
First in, first out.
Yeah, absolutely. And so I think time has got a fair bit. And of course, there may be other stuff as well. But time, I think, is the big one. Deepan, thank you very much for joining us. It's a pleasure having you here on CNBC-TV18. We're excited to unveil our brand new global business news channel, the all-new CNBC-TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC-TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC-TV18 Prime at 12 noon for the Global Reset and Global Lens at 8:30 in the evening. Okay, welcome back. Vikas Khemani is now with us, founder, Carnelian Asset Management and Advisors. Vikas, good afternoon. Good to have you with us here. Interesting backdrop behind you, dimly lit, looking nice. How are things, Vikas? What have you been up to? What's top of mind? And you ask around and you talk to people. Everybody's very focused on their stocks, whoever you speak with, and that's the way it should be, I guess. But everyone also complains there's nothing new, which is, the new thing is not. One is finding it difficult. Maybe because stuff has run up, valuations are high. What you already own, you own, and you're bullish about it. Is that a broad frame of mind you find yourself also in?
I think cannot be better than that, Prashant. Just think about it. This clearly shows that there is a continuity of the growth. If I own certain stocks and continuity of the growth is there despite short-term challenges, that's fine. I mean, you don't have to find something new every now and then. And I think that's the beauty of the India story. That India is going to compound, has been compounding, is going to compound sustainably for next 10, 15 years. And if that's the case, why to interrupt compounding? Why to interrupt what's working well for you? Unless you are a short-term trader. So from a long-term perspective, as much as I would like to tell you every week new, but I have nothing new to tell you, right? Because it will be boring, same stuff that India story is good, structural is well placed. The sector which are leveraging Indian economy, export story, manufacturing story, all will do well. So within that, obviously, you keep looking for stocks all the time. But from long-term investor perspective, we don't really churn very often, and you constantly keep on looking for. And frankly speaking, as much as the market has talked about in the last 3-4 months, I mean, we haven't made really significant change in our portfolio. We have added few stocks. I mean that's a part of the normal course. But despite such a big up and down happening, at least we haven't made significant change. We took knock in the portfolio performance. It's come back. So I mean that's the beauty of the market, right? That's the beauty of India's story.
So one theme which you've been very bullish about is manufacturing. You've called it a decadal opportunity, a structural theme. So that stays. But within that, as you said, you do make churns in your portfolio. Some stocks are out, some new additions come through. Do you want to take us through the churn within the micros in the manufacturing theme at this juncture where the risk reward is favorable?
Okay, look, I don't want to go into stock specific, but I can definitely tell you, some segments we've been kind of, adding chemicals in the space where we've added in the recent past. Especially the agrochemical looks pretty decent. CDMO space we've been adding for the last 1.5 years, and I think that seems to be now doing well. But that continues to remain, very large opportunity for us. Within auto ancillary, some interesting companies are there which are looking pretty interesting. With garmenting has been doing very well. You can find interesting opportunity there. Within that, capital goods is a very interesting segment where we are seeing a structural growth story. So manufacturing is actually, the thing is that it's very broad based. Whatever sits between import, substitution, export oriented opportunity, you tend to find that. Yeah, the only thing which we don't tend to kind of, we don't buy companies which are outrageously expensive, trading at 100p, and they might do well. Look, it's not my place to, criticize any valuation. It's just that it's not in our comfort zone. And when things change, they kind of tend to take a very big knock. And that is where we've been kind of, trying to stay in a sweet spot where PEG ratio is between 1 to 1.3 kind of things. And that's the kind of journey we've been kind of playing, and that you are able to find interesting ideas in that. Yeah. And we are fully invested. So it's not that, we have some small amount of cash. We have full investments, and we are fully convinced about the story.
Oh, well, and that's the art and science of it, isn't it? Because to find those right companies with the right prospects at the right price, and you guys have been doing it for so long. So tell us what's exciting. I mean, as you go about looking for these interesting stories, particularly within manufacturing, because manufacturing is a very, very large set. Last couple of months, what have you had your eye on? I know you won't name stocks, but just some sense of what is exciting you at this point.
I just said that, right? Like, chemicals is what we've, added its recent past. And, very interesting part, Surabhi, is that, as the markets are broadening, very often you say newer opportunities, the segment which you would not think that, are part of the story ends up being, part of it. We, and then there are, like, within the manufacturing, there are enabler sectors. Like, we invested in a company which makes, the factories. So, prefab, and PEB buildings, so pre-manufactured buildings. So right now, today I met a company which is also doing same thing, but they are exporting. I would never think that PEB can be exported, but today I found that they're also exporting. So I mean, constantly, India is such a broad market that you every day find an interesting idea which you otherwise would not think is possible. So, and that's what I keep calling it a transformative journey, because, in India, in the depths of India, many companies are building businesses which are size and scale. And that is where there's a significant alpha creation opportunity as well. Like I said, some of the segments which we mentioned, we continue to remain overweight, and we keep buying stocks in that.
In chemicals specifically, because it's again very wide, and depending on which chemical and which supply chain you're looking at, the outcomes can vary. What is it that you like more? Is it the pharma API guys? Is it the fluorochemistry guys?
Pharma APIs, of course, has been our, especially has been very a large holding for us for quite some time. But other than that, we own SRF as a large holding in our portfolio. We own Aarti Industries in our portfolio. These are also focused partly, especially in the agrochemical space, apart from, and they are specialty chemical companies. So, very diverse client base, highly motivated business, tech. So those are the, 2-3 names which we own in our portfolio.
And you see the earnings pick up, because the thing is that last couple of quarters, because of various supply, sometimes oversupply issues in the market, earnings have been a little volatile. But what do you see ahead, say next 1-2 years?
Again, like I said, we like the capabilities of the company. We think the earning growth will pick up from here. There was the inventory stocking which happened, about in last 18 months or 24 months, and that has got cleared. And as the inventory restocking happens, these companies, can have significant growth.
Okay, Vikas, so we leave the conversation here for now. Thank you very much for joining in. Slip into a break on that note. On the other side, we'll get you a few BTST calls coming in from Mitesh. Welcome back. You're watching Closing Bell, coming live from the CNBC-TV18 Motilal Oswal studio. The Nifty is trying to get back into the green, so is the Sensex. So just down close to about 12 to 13 points. Things are getting interesting after about 3 o'clock. Some of the stocks where you are seeing buying coming through, I think Dr. Reddy's, Ultratech Cement trying to cut the losses. Tata Consumer is up nearly 1.5%. Bajaj Finserv is up half. Eternal too has ticked higher, 1.25%. But amongst the heavyweights, I think it's ICICI Bank. We should get that up. That's up close to about 0.5%. Mitesh is now back with us for a few BTST calls. Mitesh?
I do in fact have Eternal on my list. BTST here with a target 239 for a 246 kind of a target for tomorrow. And the other one is Adani Transmission Gas Limited, which is APGL. That's for BTSC as well. Keep a stop just below levels of 685 yen, targets of 710.
Okay, thank you very much for that. Let's talk about Inox Wind that's trading with cuts after reporting the Q4 numbers, last of the earnings print coming through. Vivek joins in with the details.
Well, that's right, especially after the results of very strong results of Suzlon and the kind of guidance that the management gave, 60% growth guidance across most of the key parameters. All eyes were on Inox Wind. Inox Wind, well, the numbers didn't disappoint. Execution, how, kind of missed the mark as far as what the management had guided at the end of Q3. But let's have a look at the numbers themselves. On a year-on-year basis, very strong. Revenues higher by almost 2.5 times. Profitability higher by 2.6 times. EBITDA margins improving by almost 80 basis points. And profitability higher 5 times. And this is on a very muted base as far as FY24 was concerned. But let's have a look at what exactly is keeping the stock quite subdued in the session today. The company had guided for an execution of close to 800 megawatt for FY25. But despite a very, very strong Q3 as well as Q4, the company at the end of FY25 managed to do an execution or a delivery of close to 705 megawatt. Again, a miss as to what the company themselves had guided, which is what has kept the street quite worried. Along with that, increase in receivables seen in line with other infra companies is also something that the street is awaiting more clarity from. The other blip has been the fact that the order book accretion has been quite muted in the quarter gone by. Order book currently at 3.2 gigawatt. On a sequential basis, it's dipped from 3.32 gigawatt last quarter or at the end of Q3. FY25 order inflows at just around 1.5 gigawatt. Remember, FY24, the company managed to get order inflows of close to 2.4 gigawatt. Again, raising concerns as to whether there is on-ground tendering activity happening as far as the wind sector is concerned. Now, however, the good part is that the company has maintained its guidance as far as execution is concerned for FY26 as well as FY27. FY26, the company maintains its guidance of 1200 megawatt or 1.2 gigawatt. And for FY27, they're targeting a very strong execution of close to 2 gigawatt. However, post the miss as far as the execution in FY25 is concerned, all eyes will be on whether the company can go ahead and execute what they're saying in FY26 and 27.
Thank you very much for that. Amrish Baliga is now with us on the show. Amrish, before we get chatting about today's big movers, the stock that you like is Praj Industries. Tell us about that and why now?
Yeah, I mean, I've been recommending Praj, I think, for the last 2 decades, and it's been a while now. I've not recommended this, and I think after close to 2 or 3 years, I'm recommending this stock again. Praj has been the leader in ethanol blending program globally, and they have about 10% of the global capacity. Domestic share is about 65%. If you look at the last 3 years, the revenue CAGR, it's been about 39%. EBITDA CAGR is about 51%. But lately, the earnings, have been a bit disappointing. So because of which we've seen a decent correction. And I think that's a good buying opportunity because the order backlog is about 4,350 crores, which is more than 1 year's revenue. Although we are running a bit short of the target on compressed biogas plants, but that's slowly gaining traction. And that's the big opportunity for Praj. And even in green hydrogen, they would be an important player. It's a future-ready company, expecting a 30% growth over the next 3 years, CAGR. And the management is confident of about 10,000 crore top line by 2030, with about 50% of that would be export revenues. So I'm expecting a EPS of about 28 for FY27. And with that, my target is 620 in the next 9 to 12 months.
Okay, no, absolutely. And as Amrish says, he's kind of sort of recommended this for a long time now. That is Praj Industries. It's a thematic, it's been a thematic idea for a lot of people for a long time. By the way, look at the market now. It has come up. There is a bit of a swing higher, which has happened starting 245. We were at about 24,660. And we've basically moved up about 90 points. What's the time now? Okay, so about 20 minutes, we've moved up about 90 odd points or so. That's the sharp swing up, and I think we should be back in the positive zone. Almost, right? I think we did. So 24,750 was the close yesterday. Yeah, we did actually come into the green for just a little bit, but we were flat, almost in the green. So. Quite a bit of a recovery. The low today has been made at 24,526. So this is interesting stuff. which seems to be going on. Well, let's play out a quick soundbite. This is Kaku Nakate of Bank of America Merrill Lynch from the sidelines of the conference, Bank of America India conference. Listen in.
Now, as you know, that when you invest in capex, the payback is 3.25%, while subsidies is flat. It definitely spurs consumption, but it doesn't have a multiplier effect. So that headwind you are definitely seeing, which we can't really rule out. But on the private sector, to your point, people are enthused of really getting into the electronic sector, where there's a lot of, PLI boost, there's a lot of interest, and, we can become really suppliers to the world. If the pharma costs or the medicine costs, healthcare costs have to come down in the US, we could play a crucial role, but the policy needs to really come out. But without that, on the consumer, the demographic dividend, and basically what we have best going for every corporate is controlled inflation, right, which is never good interest rates and a decline in interest rates. And third, policies of certain states which can compel them to really come in a larger size to actually grow or invest in sectors where India could play a leading part. If we have 4.8% of earnings to GDP, and many people used to say India has huge valuations, but actually the profit earnings have lived up to that expectation. So we have not had a PE expansion. The earnings have actually really driven that. So that's very important. And that's the point we are pointing out at the conference, that that's something the FPIs are missing out on.
Okay, interesting conversation there. Let's run you through some of the big movers, stocks which are moving up. We spoke about Bajaj Finserv. Some tech names are now pushing higher. So Tech Mahindra is cutting its losses. Infosys now down only about 0.5%. TCS is trying to get back in the green. So tech is pulling up. You've got Eternal, which is up more than 1.5%. Eicher Motors, where the numbers look good, stock is holding up in the green. The top gainer today continues to be Adani Ports. Adani Ports is higher in trade. In fact, I think a couple of the Adani Group stocks are looking up. Even Adani Power is up close to about 2%. Amrish, in the auto pack, at this juncture, which stock would you recommend buying? I remember in the past, I think Hero MotoCorp, you found the risk reward fairly attractive. Does that stay, or do you look now, considering TVS has also been doing very well, the performance has been good, would you look to add TVS Motors to the basket?
No, see, when you're looking at two-wheelers, you should have both Hero MotoCorp as well as TVS, and to a certain extent, surely Eicher. And when we're talking of auto overall, when we're talking of four-wheelers, LCVs, and surely tractors and SUVs, then I think the stock one should be looking to buy is Mahindra and Mahindra. Because, their new EV launch, which they had recently, I think that's been extremely successful. And I think that is what will change the face of Mahindra and Mahindra, just like what Scorpio did close to about 2 decades back. That completely changed the way people looked at M&M. I think the latest EV offering is what will do the same thing to M&M going ahead.
Yes Bank, do you know what's happening? 8% up. Look at the volumes on Yes Bank. And the other one is CDSL. That's been a rocket stock. What did we miss in these two?
Yes Bank, like I've been bullish on the stock for a while, but surely I didn't expect this sort of a move because whatever said and done, there's no open offer for this investment by Mitsui. But I think what has changed is that it's no longer, that question mark is not there in Yes Bank, and it'll be seen now as more of a foreign bank backed by Mitsui. So I think this can still move up further. In fact, I had a price target of about 36 over the next 18 months to 24 months. But this move from 2021 onwards till the current levels is not what I expected right now. I thought it'll happen over a period of time.
So you can still buy because your target price is 36, but the time horizon should be about 1.5 to 2 years from here.
Absolutely.
And CDSL? Is there any news flow?
CDSL at these levels, I'm finding it a bit, expensive. We've already seen the stock move decently well. Although, yes, it is backed by numbers. But then from here on, for it to move another 15-20% would be a bit difficult, at least in the near future. So I would surely wait for a correction to buy into CDSL.
Okay, all right. So that's the view on CDSL and on Yes Bank. Yes Bank indeed has done really well today. Actually, so is the market. It's a very good recovery at a time when US futures are still down between 0.5% to 0.75%. The headline index has come back. Midcaps are doing really well. Yeah, so not a bad way to start the week, actually. We do have to take a very quick break. And as we take that break, here's some good news coming in for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. You can get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app from the Apple Store or from Google Play. You can also, of course, scan the QR code, which is coming up on your screen.
Okay, welcome back. That's basically what you have. So the market, after teasing green for just about a couple of seconds, actually maybe a minute or so, back down in the red, but nothing really to worry. Now let's just bring you an exclusive conversation. I spoke with George Yeo, who was the former foreign minister of Singapore. I mean, I think one of the most astute watchers of global affairs out of Asia. Really an insider in terms of some of these geopolitics and relations between important big powers. I spoke to him about a variety of issues and just want to sort of tease out a few points that he made. One, of course, about Trump's negotiating style. And, of course, the second is about India and China and why cooperation is a must and essential. Listen in.
No, in the real world, governments play an important role in terms of infrastructure, regulations, education, tax policies, and so on. So you can't avoid governments needing to have a view of economic development, both for the long term and for the short term. For the short term, partly out of electoral considerations, but for the long term because people are affected. The problem is this: it's not whether or not you have industrial policy, it is how you carry out industrial policy. If you are too dirigists and you go into details, you end up helping certain groups, entrenched groups, to collect rents, and you lead to corruption. So industrial policy should be broad enough to ensure that within specific sectors, there is competition, and that you're not favoring one group of individuals or one company over another. Well, Trump, we all know, is a bully. And he believes that bullying is a very good negotiating tactic. So before he talks to you, he roughs you up. Then he softens you. Then you will agree readily to his demands. Then he put his arm around you and you say you're a wonderful friend. You feel so warm inside. And that's how he deals. This is his method. Now, he can do that to small countries like Panama, maybe even to Singapore. But he can't do that to China. He can't do that to Russia or to Europe or to India. What is Trump's preoccupation? It is the coming midterm election. If he doesn't maintain Republican control of both houses, the second half of his presidential term will be a write-off. So you can be sure that whatever he does, whatever his tactics, his preoccupation is ensuring a good midterm elections for the Republican Party and for himself. And if tariffs remain high and the cost of living for ordinary Americans go up, he'll be in trouble. So I think before the middle of next year, things will come down because he will need to get the ground supporting him again. But he must have had enough victories to convince them that MAGA is an ongoing concern.
All right, so that's a big global view coming in on how geopolitics and a lot of these trade discussions are center stage for markets at this point. A small dip, by the way, as we are getting set for the close, about 77 points, 75 points lower once again. But otherwise, the Midcap index continues to do fairly well. Ambrish, finally, before we let you go today, we've discussed one stock. Anything else in the mid-cap space that's caught your fancy, where you've really liked the numbers, outlier numbers, where a buy perhaps could even be warranted?
The other stock is into specialty chemicals, like a company like Archean Chemicals. They are the largest exporters of bromine and industrial salt. 29 global customers in 13 countries, 38 domestic customers. And now, in fact, they've gone in for an expansion. And I think that is what will play out in FY26 and FY27. In fact, the margins had come down, but I expect the margins to get back to that 40-50% range. They had come down to about 26% recently. So overall, if you're talking of FY27, I'm expecting a EPS of close to about 45. And with this, my price target for Archean Chemicals is 780.
Okay. All right. Archean Chemicals, another stock of choice for Ambrish. Good conversation this afternoon, Ambrish. Thank you very much for joining in. We look forward to the next one. Well, we're down to the last 2 odd minutes of the day closing out. If you look at the Asian picture, we're in sync with some of our neighborhood markets. For instance, the Hang Seng, after falling 2.5% in the morning, finally ended with a drop of about 0.5%. If you're looking at Europe right now, again, the cuts are between 0.25% to 0.5%. Ditto for US futures, at least at this juncture. And we have been more or less in sync with that. 0.3% lower is where the Nifty is going to end. So let's talk about the weak hands then. Weakness in some of the global-facing names, particularly metals, of course, for obvious reasons. JSW Steel about 2% lower. Tata Steel about 1.2% lower. And let's see where Hindalco has ended. Hindalco down about 0.5% as well. So metals definitely a weak spot. Beyond that, Tata Motors, Hero Moto, Bajaj Auto, not a great day for auto stocks today. Banks have been muddling along. Bank Nifty is better than Nifty. Bank Nifty's managed a positive close, a close in the green, but some of its main constituents like HDFC Bank down about 0.5%. If I look at ICICI Bank, that's the one that's been a counterweight, and SBI has managed a very, very small green tinge on it. Speaking of green, for the Nifty on the upside, M&M following those good sales numbers for May, up about 1.5%. And then the consumer space looked quite okay. Eternal, Tata Consumer, HUL, Nestle, Asian Paints, ITC. So largely a consumer-driven day on the green side, but still not enough. 60 lower on the Nifty as we're playing out. But the story on the broader market is much, much better. The Midcap index is up 0.5% as we're ready to close out. Some interesting names. By the way, IOB in the dying moments of trade is surging 6%. There is Karur Vysya Bank, these tier 2 banks, 7.5% on the upside. And then, of course, there's Yes Bank with the excitement around the Sumitomo Group checking in. 8% up on that stock as well. AstraZeneca on numbers, 16% up on AstraZeneca today. Spark, Sun Pharma, Advanced Research having a good session. Imagica World, the numbers I remember this quarter weren't that great, but anyway, from the small cap arena, 8% up on Imagica as well, so not too bad out there. The disappointments of the day would be Inox Wind on numbers, 5% lower. Nykaa is lower despite the decent numbers, down about 4.5%.